The biggest issue I see a lot of traders make when they're trading is marking this as a bullish order flow. They might consider this a break of structure. They might consider looking for longs using a demand zone here, or even look at fair value gaps and start blindly longing out of that fair value gap. But this will just tremendously affect your equity curve and your win rate, right? Making these silly mistakes will just destroy your capital and just keep you in this break-even loop. I'll show you guys how we can actually go against actually taking silly trades like that and actually catch this as a reversal rather than a break of structure. So the first thing you guys want to do is actually focus on our order flow. So we can see we're in a bullish market, right? Bullish fair value gaps, displacing price higher, and then we have a mitigation of this fair value gap. Beautiful. As we have that mitigation of that fair value gap, we fail to displace price higher. So that means we fail to expand out of this area. Now, even on the daily time frame, a lot of people use this as a break of structure. There's a body close that is valid for their system to now look for longs and blindly trade for longs. Instead of marking this as a break of structure, we actually want to put our focus on the fair value gaps. This fair value gap here has failed to displace price higher, meaning this now becomes an IDR. This is a fake move higher that a lot of traders will actually get trapped into. If there's a lack of fair value gaps, we're in a range or an IDR. An IDR is an inducement range leg, meaning this low will be taken out and this high will be taken out because there's a lack of fair value gaps. So now, if we have a bullish bias, we actually want to see fair value gaps being created out of this area. If we want to see lows being taken out, we want to see a lack of fair value gaps. Now, if we jump down to the 4 hour, we can just look at this as a normal range, right? Since we use the daily time frame, we just understand that and we'll just skip this step. But even here, we could focus on our fair value gap here. If we are truly bullish, that is fine. We'll be still using our 4 hour order flow to push price higher. This can now make a daily fair value gap bullish if we are bullish. But since our daily has an IDR and our 4 hour fair value gap is failing to displace price higher, we can now have a better understanding of price actually taking out this low. Now, using candlestick signs, we'll actually see that we have the fair value gap here, meaning we will most likely take out this high here. So as we do have our 4 hour fair value gap mitigation, which is this here, we have IDRs again. So the same thing we saw on the daily, we're seeing on the 1 hour. Well, now we have some context. We've approached liquidity, beautiful, and now we're in this range here. The range either gets broken, meaning the 4 hour will continue displacing price higher, and there's a potential daily fair value gap being made, or we actually sweep the range and continue bearish and actually have a close below and the 4 hour fails. Now, if the 4 hour fails, that shows us we'll most likely target this range down here, the IDR. So as we see a lack of displacement, IDR is being created both sides, we understand this whole thing is a range. So we can actually decipher this going down to the 15-minute and seeing why the high we're taking out. Again, IDR here, and we're prone to actually look at this as a magnet for liquidity sweeps. We're not really interested here because we have the 4 hour down here. So this 1 hour fair value gap doesn't really have much power over the 4 hour. Now, when we're actually deciphering this, as we get that bearish move, this 15-minute fair value gap's objective is to actually push price to the 4 hour. And this 4 hour should continue displacing price higher. But we can see there's a lack of fair value gaps, right? We sweep the high and then the fair value gap is made. There's no context behind this fair value gap, so this one will most likely fail. Since we've already mitigated the 4 hour fair value gap, we can now actually just start looking for bearish order flow. So that means we can now actually look at this as a change state delivery, right? Because we had a consecutive up candle that took liquidity in a key area, and our 4 hour is no longer displacing price higher if this low gets taken out. Then you guys have some bearish PDRAs, right? We have a bearish order block, all right? And this up candle is a bearish order block, and we actually start having our bearish fair value gaps just like this here. Again, since we are working on the higher time frame, we could actually have our stop loss up here, right? 32 pip stop loss, that's more than enough. Again, since we don't have any bullish daily fair value gap and there's a lack of resistance, we actually understand price will actually continue that expansion very, very quickly, just like this, right? Giving you guys a rough 4 hour. Now you guys can partial or even look for scale-ins in conditions like this where there's more fair value gaps, right? So again, of course, price isn't going to shoot down like this every single time, but if it was to continuously slow down and continue that bearish move, then these are beautiful scale-in opportunities. Just giving you guys, that extra 2-3 hour helps you boost your equity curve instead of just looking for longs blindly, because you've seen this as a break of structure and now you're looking for longs out of a fair value gap or demand zone. Now here's another example on EURUSD. When we do have this quote unquote break of structure, we're not actually looking at this as an indicator for bearish price action. We're actually looking at this as an area to see bullish price action. And the reason why is we could jump up to the weekly time frame. Again, we're doing the same thing. Do we have any bullish fair value gaps? Yes, we got a bullish weekly fair value gap that has not been closed below. And then we get our bearish fair value gaps that are failing to displace price lower. Now, as we continue that movement higher, we now have a range. Again, this candlestick range right here either gets broken or swept. In this case, it gets swept. So now, since we know this low has been swept in a potential bullish market to target the candlestick range up here, we can actually now wait for our bullish order flow. Again, we can see a lack of fair value gap displacing price lower. And now if we jump up higher on the daily time frame, we actually now have a daily fair value gap. And we also have a change side delivery, it's consecutive down candle, also sweeping liquidity and continuing that bullish order flow. Beautiful. But this fair value gap gets mitigated multiple times. That is perfectly fine. We understand that we are in a range, and to actually avoid taking losses here, we could jump up to the weekly again. Since that whole week, there was a lack of movement, and we actually understand in a bearish market, in a bullish market, price will come below lows, coming for liquidity sweeps in the previous candle, in the high time frame. We actually want to see this candle here take the previous candle low, mitigate the daily fair value gap, and target the high here. Now, we know this whole gray box is the daily fair value gap, and this is the previous week low, and we get that expansion. Now, we know the market is fractal, so we're waiting for the same thing. Again, as we approach this low, which is the previous week low, we can actually see bearish fair value gaps failing to displace price higher, and now we actually get a bullish fair value gap just like this. This is the only bullish fair value gap in this leg, from this low to this high here, so we actually want to put our focus on this fair value gap. Again, you guys can see again, there is another 1 hour fair value gap, and we continue that expansion. As we do continue expanding on the 4 hour and the 1 hour, our time frames will work together and make new fair value gaps just like this. 4 hour fair value gap, just like that. Another one here. And these are when you guys can look for entries. Beautiful fair value gap entries just like this, and taking them higher to our drawn liquidity. Again, very easy for traders to look at this as a break of structure and, sell a supply zone and get wrecked, and also just sell a random fair value gap. But we want to use context. We want to see what's occurred in previous price action to show where we are contextually and what our order flow is now. So now you guys know this isn't a break of structure on the 4 hour. We know the 4 hour bearish fair value gap is going to fail. We get our change side delivery. We get our daily bullish fair value gaps and our bullish 1 hour and our bullish 4 hour fair value gaps, leading to price to a drawn liquidity. Very, very simple. Just focusing on our fair value gaps.